Hey everyone, and welcome to this explainer. Today, we're jumping straight into a really fascinating high-stakes situation unfolding right now in the global commodities market, and we're talking about silver. It's a market that's currently sending us some seriously mixed signals. I mean, on the surface, prices look pretty stable, right? But beneath that surface, investors all over the globe are watching a very specific set of factors that could trigger the next massive move. We're going to break down exactly what those factors are, using the hard data to cut right through the noise.
So what if I told you that the next move in silver could create a major opportunity for investors? It's a bold claim for sure, but it perfectly captures this threshold moment the market is currently facing. Okay, let's dive right into this and look at the actual numbers to figure out exactly why so many eyes are glued to the silver charts today.
All right, moving into Section 1, the current silver market.
Right now, the global spot silver price is sitting at roughly $58.06 per troy ounce. You can kind of think of this number as the center of gravity for the entire global silver market. It's the baseline. It's where everything else moves from. Now, you might see different numbers depending on where you live or what specific financial products you're trading, but this $58.06 international benchmark, that is absolutely crucial. It remains the biggest single factor influencing prices worldwide.
But how does that global benchmark actually translate into local realities? Well, to put things into perspective, let's look at a couple of localized markets. Over in Pakistan, silver is currently trading around 6,352 rupees per tola and about 5,444 rupees per 10 grams. Meanwhile, over in India, the retail benchmark sits at approximately 240,000 rupees per kilogram. Now, you might be wondering, why the wildly different quotes? Well, it all comes down to local taxes, fluctuating exchange rates, and regional market demand. But just remember, despite all these local variations, that international spot price of $58.06 we just talked about is the gravitational pull for the whole shebang.
Okay, let's pivot to Section 2. What's driving the price?
Right now, the absolute biggest factor manipulating these short-term prices is the Federal Reserve. Here's the deal. Silver is basically just a lump of precious metal, right? It doesn't pay you rent, it doesn't give you a yield, and you certainly don't get a dividend just for holding onto it. So when investors expect the Fed to raise interest rates, things like bonds suddenly start paying out guaranteed cash. And it makes you think, why hold silver when you can get a guaranteed higher return somewhere else? That dynamic is exactly why expectations of higher interest rates put immediate short-term pressure on non-yielding metals like silver.
Another massive driver is the US dollar, which basically acts like a giant seesaw for silver pricing. Because silver is priced in dollars globally, the strength of the dollar literally changes everything. If we have a stronger dollar, silver becomes way more expensive for international buyers who are using different currencies, which naturally crushes global demand. On the flip side, if the dollar weakens, silver suddenly goes on a global sale. It becomes highly attractive, and that increased international demand can really push prices higher.
And of course, we absolutely can't ignore geopolitics. Silver, much like gold, is a classic safe haven asset. You know, it's where money goes to hide when the world gets scary. But currently, with a recent easing of regional tensions and a drop in oil prices, that immediate panic is fading. These combined factors are actively reducing the demand for those traditional safe haven assets. Right now, investors are keeping their powder dry and taking a highly cautious approach while they wait for some fresh economic data.
All right, let's zoom out a bit for Section 3, long-term industrial demand.
This part brilliantly illustrates why silver is so entirely unique. We aren't just talking about a shiny metal sitting in a vault for investors. We're talking solar energy, electric vehicles, everyday electronics, life-saving medical equipment, and advanced technology. Silver is an irreplaceable, highly conductive modern necessity. It is the literal backbone of our modern industrial world.
And when you combine those specific industrial use cases with the massive global boom in clean energy, you arrive at an undeniable truth. This overarching global shift toward things like solar panels and EVs is expected to drive strong, undeniable industrial demand for years to come. I mean, solar panels and electric vehicles require huge amounts of this metal. This underlying industrial math is exactly why so many long-term investors are happily ignoring that short-term market noise we were just discussing, and they're just continuing to accumulate silver for their portfolios.
So where do we go from here? Let's get into Section 4, what to watch next.
Here is your actionable, forward-looking roadmap for the coming days and weeks. First up, watch the Federal Reserve policy announcements. Any hint on interest rates moves the needle. Second, keep a close eye on U.S. inflation and employment data, because those reports directly dictate what the Fed is going to do. Third,
Watch that US dollar seesaw effect we talked about in real time. And finally, stay alert for any major global economic or geopolitical developments that could suddenly reignite safe haven demand. Any surprise in these 4 exact data points is the spark that could lead to extreme, sudden volatility in the market.
Which leaves us with the ultimate question. With shifting dollars, interest rate tension, and that massive underlying industrial demand, will silver break above $60 per ounce, or is it going to pull back before the next major rally? Keep your eyes on these indicators, stay informed, and think critically about this next market move. I'll see you in the next explainer.